Hey everybody, it's Hussein Kabani, your favorite broker, and we're back with another market update. So we are kind of towards the end of August 2024 right now. And this video has been a little bit delayed because I had a little bit of a discrepancy with the numbers that Toronto Regional Real Estate Board was reporting versus the numbers I was actually pulling right out of the MLS. I think we're still waiting to get some clarity on how they came up with their numbers. I think there's some different categories that they included versus the general areas that I've been looking at. I mean, traditionally the GTA has been formed of Durham, Halton, Peel, Toronto, and York region. So these 5 regions, but I think that they've added Dufferin and Simcoe, but I ran those numbers at a high level, but the numbers still didn't jive to me as what Treb has reported. So I just decided that I'm going to go with my numbers, the categories that I have, or the regions that I have always been reporting on. So I'm just going to move forward with that. It hasn't gotten like really any better. I think Treb was saying that we were like 0.9% higher in terms of like overall sales for like July versus like 23, but I don't see that. What I see is some really bad numbers, I think, and I actually need to put on my glasses to figure it out because I can't believe that they're like this. So bear with me here. I'm going to read them out with you guys. But it looks like in the GTA, if we look at January to July, it looks like we're down in terms of sales in like condo and in freehold by about 6.6%. The region that's doing the best is Durham. So we're only down 0.2 in Durham with that. In terms of like the ones that are not doing as good, and it's not overly that bad either, is basically Peel. And Peel is like 9.2%. So overall, I even ran the numbers for August because we are the 20th of August where we're recording this right now. So it takes some time for the deals to firm up. Like for example, I can't run it right until the 20th because there may have been a deal that has been conditionally done maybe 5 days ago that hasn't actually firmed up in the system. So I would be getting not the most accurate number. So when I even look at it from the 1st to the 12th, again, let me put on these again because it's not looking good. It seems like we're about 20% lower in terms of sales overall so far. And it's actually Halton again that is about 30% behind. I would say the one thing that I actually did notice is that the Toronto condos is doing a little bit better even in July. Because if we looked at it in May, it was down 26%, in July it was 25%, and in July it was 10%. And overall now, because we did have a stronger start, but from January to July in the Toronto condo market, we're down about 11% in sales, which is about just over 1,100 sales. But if I look at it from the 1st to the 12th of August, we're down about 40% there. But that could also be like the status certificates. They have a longer condition. So we'll probably get a better picture of what's going on 5 or 7 days into September. But as of right now, the sales don't look like they're even keeping up with last year. I believe in the Toronto Regional Real Estate Board, the same 5 categories that I've been talking about, we had about 66 or 67,000 sales in 2023, which was actually down about 12% from the year before that. So us being lower than the 66,000 sales even this year, that's what's actually happening right now. So that's kind of in terms of sales. So the sales haven't really been improving, but inventory position has been coming down. I wouldn't say the inventory position has really come down that much, but what's happening is that now when we compare it back to the previous year, I don't think I need these anymore. Numbers still don't look good for inventory. But even when we look at last year, we started building up inventory. So when I was starting to compare inventory, say for example, in like February and March, we had a huge gap between the numbers from 23 to 24. But that inventory in 22 started to build up kind of in the middle of the year and into the back half. So now when I'm starting to compare the numbers to last year, the gap has gotten smaller. And by that, what I mean is that as of today, August 20th, the numbers was about 47% more inventory across the board in the 5 regions that we're looking at, which is Durham, Halton, Peel, Toronto, and York region. And the heaviest inventory increase as of right now is actually in Durham, and that is like 57% more inventory than we had last year. And the smallest number of increases actually in Peel, which was about 39%. Even in the Toronto market, I would say that we have about 37% more freehold inventory, and we actually have 50% more in the condos. York region is at 53% more inventory. So to summarize so far, our sales are lacking. Our inventory position is still quite a bit higher. Let's call it like 50% higher than it was even last year. Now that kind of leads us to price. It's really hard, to be honest guys, to run the entire average price of the GTA because we can only pull so much information at the same time from MLS. And since I wasn't so clear on the reports that Treb pulled, I didn't want to actually use those numbers. I want to use the numbers that I can actually go back and verify and pull out of the system. So I did a smaller sampling, and obviously you guys know that I really represent Pickering hard, so I chose the Pickering numbers here. And I want to make a note about this too. So the condo apartment market in Pickering is actually down in average price by about 18%, which is a huge number. When you talk about dollars, it's about $123,000 that we're down from last year. But I think this is because we've never actually had so much smaller units available in Pickering in terms of condos. Because of all the new condo builds that have been happening, we're seeing condo units that may be 400 square feet, 450 square feet, 500 square feet, which we really never had so much of. Like most of the buildings that we've previously had in Pickering were the older ones. And with the older condo buildings, they obviously had more square footage, which more or less commanded a higher price. So now that we have units that are, 400, 450 square feet, they are going to have a lower price, which I think is bringing down the overall average price of the condo unit. So I don't think that we're really in that bad of a shape of what the numbers are showing us in terms of decline average price from last year to this year, but I think it's just a mix that it's a little bit different in terms of square footage. So that's for the apartments. The condo townhomes, I would say, is kind of the same thing over here. We're seeing a decline of about 5%, which turns out to being about $37,000. But I think that's the same thing because the condo townhouses that we're seeing, and I've included the stacked ones in here, some of those ones are like, 600 square feet. Traditionally, these things have been, 12, 13, 1500 square feet. So it's just a mix in the inventory that we're also seeing. Freehold townhomes is basically holding its own. They're only down about like $7,000 from last year, which is only about 0.7%. Semi-detaches, I again think it's a bit of a mix because we don't have that many semis. So I think that since we had more sales last year versus this year, it is kind of bringing down our average price, and that's brought it down about 8.4%, about $79,000. Detach is actually holding on pretty good. It's still lower than it was last year, about 3% lower than it was last year, which is looking at about a $35,000 decrease in average price. So realistically over here with our market update, guys, like we are lower in terms of like sales volume, we are higher in terms of inventory, and we are in terms of like average selling price, we are lower on the average selling price as well. So what does this all mean? I think a lot of people had more hope that starting in June, when the interest rates started to come down, that we would start to see a spark in the market. Because what happened this year, just to recap, we actually had a very strong start. January, February, we had a strong start, and started in middle of March, we saw some kind of like weakness. Because in January, February, when we looked at the numbers versus 23, the numbers were actually higher. Our sales numbers were higher. And then March, it was kind of even. And then starting kind of April, we were not doing the same amount of sales that we were in 23. And that's kind of been continuing. So a lot of people thought, like I said, in June, when we had the rate decrease, that we would start to see the activity happen. I think a lot of people realized that, hey, maybe the average price won't come up so quickly, but what we can expect to see is like at least some movement in the marketplace. But we didn't see that. Again, one of the reasons I think is that we're holding a heavy amount of inventory compared to last year. So we're not really seeing that happen. Even in July, when we had another rate decrease, we never really saw it, both quarter point decreases. Now, sitting here August 20th, we saw the inflation numbers come in lower than what we were expecting. Manufacturing numbers are lower than what we expected. I saw another report in the Financial Post that new building permits in June were down about 14%. So this is all actually having an impact on our market. And that leads us to the Bank of Canada announcement in September that's coming up in about 2 weeks from now. I think a lot of people are speculating, it wouldn't be out of line, or I wouldn't be shocked if they actually did a 50 basis point reduction, 0.5% reduction right now. And this is something that I alluded to in the last market video that we did as well, is that it wouldn't be unreal. Now that could actually spark something. I think that there is some pent-up buyer demand out there, but people are still afraid to pull the trigger. So I think that this might get people's attention and start at least getting the volume going. So June, July, a total 0.5% down in terms of Bank of Canada. September, I think we're probably going to see a 0.5% decrease based on lower real estate sales, sluggish economy, unemployment numbers, inflation numbers. I think it's all leading towards that half point. And then we have 2 more announcements after that. So I think we could probably see a quarter and a quarter. That would mean that if this all comes to fruition in this year of 2024, we would have seen a 1.5% reduction from the Bank of Canada in interest rates. And that is hopefully going to help the housing market moving forward. There is a lot of confusion. This is what I want to add at the same time, because now that I'm getting more phone calls, most people are kind of asking me, hey, so what do we do? Is this a good time to buy or sell, or should we be waiting a little bit more? The truth of the matter is that it's very, very hard to tell. And I know this sounds like a repeat of what I've said a lot of the times recently, but that's the only thing I can tell you. I think if anyone legitimately or confidently tells you that they have a clear direction on which way this is going to move forward, I would like to see their information. That's the only thing I can actually say, because I don't think we have a clear picture of what's going to end up happening. You know, sitting at 24,000 listings available for sale right now, like I said, we're about 47% higher in terms of inventory. Our sales last year in 23 were 12% lower than they were in 22, and we're already trending towards a lower amount of sales right now compared to even 23, which was lower than 22. So I don't know exactly what's going to happen. September could actually spark this thing if we have a 0.5% and really start to get things moving. But is that enough to actually bring up average selling prices and cause a bit of a stir in the market with right now 24,000 listings available for sale? And one more caveat I want to add to this is that we have kind of seen that inventory stay stable over the past like maybe 2-3 weeks now at around 24,000. I think earlier in the month we were even at 23,000 or 24,300. Now we're at 24,000 and change right now. So we've seen it kind of come down. But the note to that also is that typically July and August are lower listing periods. So like a lot of people at this point right now may not want to hit the market. They'll probably hit the market kind of into September, after the long weekend in September and mid-September. So that's also a variable over here. Now, if that inventory goes from 24,000 to like 27,000, I think that we're going to have a bigger problem than what we're addressing here right now. So it's a wait and see. Now, again, to move forward on this whole thing, if you are a first-time home buyer and you feel confident about the market and you think that's somewhere you're going to live for 7 to 10 years, it might be worth it. I know I get a lot of slack when I say this because realtors are greedy. You're just trying to get a commission. Do whatever you want to do with that information. But hey, if the market suddenly starts to pick up, are you going to be okay with that and still be able to take part in the market if that's something that you want to do? It's something you're going to have to consider. And like I tell people, this is a business investment. I get it that you're going to live in it. There's an emotional component to this whole thing, but at the end of the day, you're making a business and an investment decision. And if you don't feel comfortable with that, I don't know what to tell you. Maybe look at ETFs or something else. I'm not recommending that either, but real estate is a hard thing to kind of get rid of, and there's no guarantee in it, especially for the short term. I think in the long term, we're going to be okay. The other market, again, is the same market I've talked about before, is that if you're a move-up buyer, I think that if you're trading in the same market, and I think we have to be careful about that trading in the same market right now, because if that Bank of Canada announcement in September actually has a bit of a buzz, then you have to be careful about how you're trading in the market. Right now, we might be trading in a kind of even market, list your house first, and there's going to be a bunch of houses to go see, and you can easily buy one with likely avoiding a multiple offer presentation. But if that spark happens in September, that might not be the case. So it is a careful time to basically decide if you're going to be buying and selling, what's your strategy moving forward, how many houses out there, and how quickly can you make this happen? Because you don't want to be on the market for such a long time, finally get a price, and then realize that the market actually did pick up. Not saying it's going to happen, but if it did, then you could end up in a problem as well. Again, guys, everyone's situation is very, very unique. And for that reason, I actually have a link to my Calendly. So if you guys want to talk about what your personal decision is and ask me my opinion based on giving me some of your personal information about what your direction is, what you're trying to do, and what you're looking at, I could maybe give you a little bit more of a tailored advice based on that. So I encourage you guys, if you have the questions, slide into my DMs or hit the Calendly link, book an appointment. Happy to jump on the phone call with you guys for 15-20 minutes and give you my 2 cents on that. Hope you guys enjoyed this. If you did, I can't imagine why you couldn't have, because this is the most candid advice or information I think that you're going to get. Hit the like button, share it with your friends, and most importantly, subscribe, because again, we have awesome content. Until next time, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.